Hi, good afternoon. My name is Ashley Vargas, and I will be presenting to you today the Quarter Two findings of the Purchasing Department for FR Manufacturing Company. Now, the Purchasing Department is tasked with procuring raw materials such as chemicals and plastics. Those materials are used in the manufacturing of products, including the new line of refrigerators. Our meeting today will discuss in more detail some of the findings of the quarterly audit. Estimates must be created to determine approximately how much the company will spend on materials, and it is very important to accurately capture these numbers as the estimates are used to set specific company targets, including the cost of goods sold. Preliminary estimations completed by the engineering team projected that a specific amount of polyurethane would be used during the manufacturing process. However, a quarterly inventory count determined that $350,000 of polyurethane was missing. Consequently, the team determined that a greater amount of the polyurethane material than what was projected is being consumed during the manufacturing process. So let's take a deeper look into how these findings will impact the company from a financial standpoint. Now, the cost of goods sold includes all the costs and expenses related to the production of goods. We use the journal to capture the costs associated with materials purchased and to record the other financial transactions of the company. On the left side of the screen, you'll see an example of a journal entry, which captures the inventory, an entry for cost of goods sold, and also an entry for the inventory write-off. Now, we use the T account that you see on the right side as a visual structure to keep debits and credits separated. Inventory transactions are related to cost of goods sold because higher costs of goods sold will result in lower margins. Here, we can see the adjusting journal entry and the T accounts. Now, a journal entry must be made at the end of the quarter to bring an asset or liability account to its proper amount and the proper related expense or revenue related account. Now, an adjusting entry must be made due to the inventory count that uncovered the missing polyurethane. The cost of goods sold will appear to increase as a result of this adjustment, and this in turn will make it appear as though the net operating income has decreased, when in actuality we're making an adjustment due to the findings of the audit. Now, there are several action steps that we can take to ensure that we avoid making this sort of forecasting error in the future. Now, the first step, and probably the most critical to this process, would be to determine the actual cost to manufacture the new refrigerator. So, the engineering team must revisit the product and materials cost to ensure that we have accurately captured the process and all that is needed for manufacturing. Further, the team must then review processes to determine if there are any opportunities where any process may be streamlined and made more efficient. So we have more of a reference point because this new refrigeration system has been manufactured for several months now. So we do have a frame of reference for this analysis. Now, the final step would be that we would want to audit the budget on a monthly basis. So this will ensure that things are being captured accurately and also to ensure that things are performing the way that they should be. Now, I know we presented and discussed a lot of information today. Does anyone have any questions? Well, again, my name is Ashley Vargas, and I thank you so much for allowing me to present to you today.